What up, crowdfunders? Salvador Briggman here. Welcome back to the Crowdfunding Demystified podcast. Thank you so much for joining me here today. And today's episode is a little bit different from the other episodes I put out because it's just going to be you and me today. So wherever you're listening, if you're commuting to work, you're on the subway, you're listening to this in the car, you're running, you're at the gym, wherever you're listening to, I appreciate your time here today because I want to share an important message with you because I don't think enough people know about this style of crowdfunding that I'm going to be talking about today. And today, what I want to discuss is equity crowdfunding and specifically how you can use it and who should use this in order to accelerate the growth of your business. So if you've noticed on websites like Kickstarter and Indiegogo, you'll have certain categories and certain types of products that aren't really a good fit for crowdfunding. So for example, software products. It's ridiculously hard to get funding for a software product on Kickstarter because you have to package it, you have to make people believe that you can actually execute on your vision, you can code this thing. There's a lot of hurdles to get through, but it's actually a really great marriage for equity crowdfunding. I've went out there and I've looked at the top 100 successful equity crowdfunding campaigns thus far since the passage of the Jobs Act, and it's kind of crazy to me. The success that we're starting to see to me is inspiring. Like it's really cool. There are different obviously types of crowdfunding, types of equity crowdfunding. There's Regulation A+, there's Title III or Regulation Crowdfunding of the Jobs Act, and I want to get into that a little bit and also how you can actually engineer success with one of these campaigns. So the first thing I want to say is I want to draw your attention to Regulation A+, because this has been used by a lot of major companies out there. Start Engine has really pioneered this. They're an equity crowdfunding platform with their Elio Motors campaign. That campaign raised a lot of money. I actually had them on the show in episode number 44. They raised $35 million in a Regulation A+ crowdfunding campaign. And basically, under Regulation A+, you can raise upwards of $50 million through an online crowdfunding campaign in a 12-month period. $50 million. And here's the kicker. You can actually raise these funds not from accredited investors, but from ordinary, everyday Americans. Anyone out there, if you no matter what your income level is, no matter what your assets are, you can actually participate in a Regulation A+ equity crowdfunding campaign. And that's different from the way that it's been in the past. In the past, you had to know someone, you had to be in some way connected with Mark Zuckerberg in order to initially invest in Facebook. You had to actually know the entrepreneur in order to get in on a very small angel investment family and friend round. So aside from that, you would have to be an accredited investor in order to participate in startup funding and startup fundraising. So if you wanted to say support the next Google or get into the next Microsoft or get into Snapchat or Instagram, you most likely would not have access to that type of an investment unless you were an accredited investor. And accredited investors, they make over $200,000 per year. You have to also show evidence that you're going to make that in the future and reasonably that you also made this in the past. I think it's 2 years. And in addition, you need a $1 million net worth excluding your house. So that's how it used to be. But now under Regulation A+, under Regulation A+ crowdfunding campaign, anyone out there can actually raise money and participate in these different types of funding rounds. So it's a transformative time. Like this has never happened before in history where the laws were written in your favor in this way. A cool thing also about Regulation A+ is that you can actually run a test the waters campaign. So test the waters campaign is kind of like saying where, I'm not actually sure if I want to do an equity crowdfunding campaign. Like I don't know how much I'm going to raise. So let's do this test the waters campaign. And rather than actually doing a transaction, we can gather non-binding indications of interest. So we get interest from a bunch of investors. It looks like we could probably raise about $20 million just based on the interest that's out there for our startup company, for our app, for our website, whatever it is. So you can collect these non-binding indications of interest under a Regulation A+ crowdfunding campaign. And once you do the test the waters period, you can then say, wow, look at this. Like, look, all these people that are interested in buying into and owning shares in our new app or our new tech startup or whatever it is. Isn't this awesome? Let's actually go through and let's do one of these Regulation A+ campaigns. So this is a really cool thing because it sort of is like a pre-launch in its own way, and it can give you an indication of demand for investors and people that want to put money into your startup company. And also, these don't have to be large amounts of money necessarily. These can be very small. So, crowdfunding by its very nature, you're having a lot of people put a small amount of money into an opportunity in order to have that thing be funded. So don't think of this as like people are putting in, $200,000 checks necessarily. It's literally everyday Americans can participate in this. So that goes a little bit into, Regulation A+. And also, I have a complete guide here, which will introduce you to all the laws, the regulations, what is it going to cost for you to do a Regulation A+ campaign, how much can you expect to raise, what do you have to do to promote it, like all that kind of stuff. I talk about that in Equity Crowdfunding Explained, and this is a complete guide, end-to-end, the perfect guide for startups, investors, and platforms. And for those of you that like listening to the show, I have an Audible version available for you at crowdcrux.com/equity audio. That's crowdcrux.com/equity audio. If you want more of like a paperback version or the ebook version, you can just go to crowdcrux.com/equity and it will take you there. But I kind of recommend the Audible version just because you can not only get a copy of the book for free, but you can also with this get a free 30-day trial of Audible. So they're running this really cool promotion where basically if you sign up for a free 30-day trial of Audible, you will also get a free copy of Equity Crowdfunding Explained. And even if you cancel your free trial, you'll still be able to keep your copy of the book. So this is like this is hitting two birds with one stone. And you can also then listen to it, and I read the book with the same pizzazz and passion that I do, that I have with all of my different podcast episodes. So aside from Regulation A+, there is also Regulation Crowdfunding. Now, Regulation Crowdfunding is what's been getting lots and lots of hype in the crowdfunding world because Regulation Crowdfunding is a little bit different. First of all, Regulation Crowdfunding, you can raise upwards of $1 million in a 12-month period if you are an entrepreneur in the audience. And also with a Regulation Crowdfunding campaign, if you're doing under $100,000, I would say the legal expenses and the cost to do it are very, very low in comparison with other ways of raising money. So it's a really great deal there. But the other cool thing about Regulation Crowdfunding is that it allows, to a certain degree, general solicitation. So you can actually create one of these equity crowdfunding campaigns under Regulation Crowdfunding. You can offer this campaign to non-accredited investors, ordinary people, and you can solicit it with tombstone-style advertisements. You can solicit it and drive people to the platform where they can learn more about this actual offering that you're doing and also learn more into the history of your startup company. So you can kind of think of this as like if we had a show, like if we had Shark Tank. Shark Tank is all about raising money, and we've seen the interest and the thirst and the enthusiasm of the American viewer interested in seeing entrepreneurs raise money and also to a certain degree wanting to be able to participate in that process. The cool thing now is that they can actually do that. They can learn about your company on Facebook. They can learn about your company via email or seeing an advertisement or maybe reading about you in a local journal or a publication or seeing you just on Instagram. And they can be taken through a link to this crowdfunding campaign. And what's more, not only do they love your product, maybe, do they really resonate with what you're doing, the mission, the video, and you, they can also own shares in your company. So this is Kickstarter, but for equity. Think of this as Kickstarter for equity, meaning that you can get funding for your company, you can gather a crowd of people, it's a really great marketing opportunity and media opportunity as Kickstarter naturally is, but finally, you're also gaining shareholders in your business. These are investors that have a financial stake in your company. Now, it's a really small financial stake, but whenever we have investment in something, I don't know about you, but I've always noticed that I'm more willing to evangelize that thing. So if I've personally invested a lot of my time in writing a book and I know it's a very good quality book, I am happy to introduce people to it, to talk about it. And it's just a passion of mine. The same thing goes for investments. So if I'm investing in something like Tesla, I own stock in Tesla, and it's because I believe in Elon Musk and I believe in the values and what they're trying to accomplish in this world. And even though there are hiccups, it's something that I'm certainly willing to evangelize. It's almost a lifestyle in a sense. That the commitment to renewable energy and also commitment to doing things in a smarter fashion, that's just something that you naturally will evangelize. The same thing goes for equity crowdfunding. When you have investors, not just customers, but investors who put money into your business, and of course you can also offer them prototypes of the product if you want, they will go out there and they too will evangelize. They'll talk about your app. They'll talk about your startup company. They'll talk about your cool new tech startup with all of their friends. They'll get people signed on. One of the things that has, I think, been just a strong contributor to, say, like the Bitcoin community, the Bitcoin community, the way that community works, the people who get in early are certainly willing to evangelize Bitcoin, because by doing so, it actually increases and appreciates their own investment in the currency, which is really neat. The more the Bitcoin community grows, the more people want to continue to evangelize it and to get more people actually using this as a regular currency, because it improves the actual intrinsic value of their own investment. The same thing can be said for equity crowdfunding. If you're invested in a cool new app and you tell all of your friends about it and they join as users, or they start to talk about it and try it out and they really like it, so they tell their friends, it actually increases the popularity of the app. It increases the monetization capability of the company. And finally, it increases the value of your investment. So this is something that, just talking about it now, it might seem a little bit strange because you haven't heard about this yet too much in the major mainstream media. And I fully admit that. I think that equity crowdfunding has in no way gone mainstream at all. That's what I love to do, is I love to bring new trends to you. I love to bring new ways of doing things to you. And that's why I was so passionate about writing this book, Equity Crowdfunding Explained, because I wanted to share something with you that I saw people were getting results, and that there was also this gap in the marketplace. So to give you an example here, Oculus Rift. How many of you are familiar with Oculus Rift? Oculus Rift raised about $2.4 million on Kickstarter. They did a Kickstarter campaign for their virtual reality called the Oculus Rift, and this is also, Oculus technology. They basically raised a bunch of money on Kickstarter, and then they sold to Facebook. They were acquired by Facebook for $3 billion. Think about that for a second. Like, obviously it's impressive. They raised $2.4 million. They had more than 9,000 backers that supported them doing this and are customers of Oculus Rift. But at the same time, they then went and they did that like hundreds X, many more, 1,000X, and they sold the company to Facebook for $3 billion. But guess what happened? None of the people who actually participated in that Kickstarter campaign, none of them that are the ordinary people just like you and me, they did not see an appreciation in the value of their money because they were pledging or donating money they weren't investing in. They didn't get a piece of the action. They didn't get a slice of the pie. They missed out on that mega opportunity. Just think about it. Had you put money, you were with the 9,000 other backers, you put a total of $2.4 million into this new technology, and then that technology was sold for $3 billion. Think about how your own investment would appreciate. That's insane. That's incredible. And that can only happen in the startup realm. In the startup realm, we see companies that start for very low amounts. They start with $1 million in funding or $2 million in funding, and they're able to grow and accelerate just phenomenally. It's almost like an exponential curve, if you will. The fact that they can grow so quickly in so short amount of time, particularly in the technology space, that's something that is only limited to tech startups and to apps and to new startup companies in general. You're never going to have the S&P 500, a company company in the S&P 500 growing that rapidly. It just doesn't happen. The company is too big already. It did go maybe through a growth spurt in its life cycle when it actually went and did an IPO. It took time to do that. But from this point in time, you're never going to get that kind of a return if you're investing in something like the public stock market, because that's just how the growth and maturity, the way that growth and maturity works when it comes to companies. So I think that startup investing is something that is definitely in the alternative space. It's definitely something that you should not be putting all of your eggs into one basket. But at the same time, we've seen the world transformed by companies like Facebook, Uber, Tesla, Google, Amazon, and a lot more. And we've seen the world transformed by these companies and also our daily life transformed by these companies. But at the same time, we haven't been able to participate in that change in a financial sense. Like, yeah, we're all using Google, we're all using Uber and Facebook and stuff, and we're participating, we're using that for our marketing needs. But our actual financial stake, we're not allowed to become a stakeholder in that company when it was just a small size. We didn't know about it. We also, as the entrepreneur out there, you couldn't give that opportunity to ordinary non-accredited investors. It was against the law. But now, for the first time in history, you can become a stakeholder in a fast-growing startup that's on the path for, an IPO, an acquisition, whatever it is. And as an entrepreneur, you can not only get funding for the company, but you can provide that opportunity to those people that believe in you. Those people that are going to be at the bedrock of your investor base and also a part of your evangelist community, you can give them this opportunity that you could previously not. It's kind of a way of rewarding them, but it's also a very smart way of building a close-knit tribe around your product and your company. We all love to watch, if you're doing like an Apple launch, you just see people out the door, literally long lines waiting for a new Apple product to come out. And everyone's asking, like, how is it that you actually get that kind of a tribe, that loyal following? I think it comes from really those early days and also the values that you infuse in the company and what you stand for. The cool thing now is that people can not only buy your products, they can support you in many other ways, they can tell their friends, but they will also appreciate their investment over time. They'll be able to do more things with that money, whether that's fund other startup companies or just take that out and cash out and use that for whatever it is that they'd like to do in life, maybe create more freedom in their life. You're giving them that opportunity. So if that sounds interesting to you, I went more in depth here, very, very nitty gritty, very into the laws, the regulations, into what you need to do in order to put together one of these campaigns, who this is really right for, and also the types of investors that can participate and how much people can put into your startup company. So if you're interested in raising money, let's put it that way. If you're a startup company that's interested in raising money, maybe you've heard of Kickstarter, but you're kind of looking for something a bit more like a traditional angel investment funding round. You actually want people to own shares in your company, and you want to raise significantly more than just a Kickstarter campaign, the average Kickstarter campaign. You can go and check out this link, and I will share a heck of a lot more with you there. So this link is crowdcrux.com/equity audio. That is crowdcrux.com/equity audio. That takes you to the Audible version. You can learn more about that. And if you're interested in the paperback version, you can just go to crowdcrux.com/equity and it will take you there. But I want to thank you for listening here today. This is a new terrain. This is very new terrain, and I think that hasn't been explored too much. And this is why one of the reasons why I'm so passionate about it is because I want to help demystify this for you, and I want to show you how you can use this in your own business, how you can use this to connect with your customers and to connect with your community. And it's something where after doing all of this research and looking through the regulations and reviewing successful campaigns and seeing the entrepreneurs that have already taken advantage of this, I just knew that I had to get this message out there. So I've started to do stuff like start to write more blog posts on it. I've started to put out more YouTube videos on it. You've seen one or two podcasts where I've come out talking a bit more about equity crowdfunding. And finally, I have this book out there now that goes very, very in-depth, step-by-step, really boils it all down very simply in sort of my hallmark fashion. I don't like things being super complicated or jargony or difficult to understand. I really like to make it simple. That's what I've done for you in the book, Equity Crowdfunding Explained. Thank you so much for joining me on today's podcast. Again, my name is Sal, and I'll see you next time.